everybody. You're watching SmallCapSteve live. Today we got Eugene Levin from Semrush joining us, a new issuer on the NYSE, a online SEO tool that you've probably seen if you've ever ran your own small business and you've tried to figure out how do I have my company show up on Google. They are, I think, the top name in SEO tools. Later on, we're going to get into some of the Canadian small cap news and venture market commentary. Lumber's back under 1,400. That's good, I guess. Bitcoin's back above 50,000. Gold and silver hanging in tight. Canadian dollar keeps going up. Tiff Macklem was talking yesterday. Sounds like Canada might actually lead the charge here in terms of raising interest rates. So buckle up. Let's get started. Eugene, thanks for joining us today.
Hi, Steve. Great to be on your show.
Well, we when I first saw your name heading towards a go public, I thought it was kind of interesting. I've ran small businesses as an entrepreneur, tried to figure out how do I get my company to show up on Google on that front page, and Semrush was always the sort of tool that everybody on YouTube that has any sort of influence over SEO and online digital marketing would always sort of bring up as a great tool. So let's maybe start at the beginning. At what point did you get involved with Semrush? Or have you been there since the beginning?
So yeah, unfortunately not from the very beginning, but I have been customer myself for many years, and that was my first interaction with Semrush. I started using the product, I think, in 2010, 2011, when product was already around for a year or two. And at that point, I was doing a little bit of marketing for my own startup, as well as marketing for some of portfolio companies in my VC firm portfolio. So that's kind of how I started using the product. And later, I continued using it as a venture capital investor to do due diligence, to research the market, to find best opportunities to invest. At some point, I was looking for software companies to invest in. I was in a growth stage firm, and we started starting with companies where we used their software ourselves. So, we thought about maybe, Dropbox, maybe, Zoom or something like this, because we used the software, and Semrush was one of the companies which software we used. And I knew founders a little bit, so I reached out to them, started conversation, and one thing leads to another. At some point, we realized that there is probably more value in me joining the company than me investing in a company. So I just joined the company. That was roughly 5 years ago. I think so far have been the most exciting journey in terms of my professional career.
That's so you've said stuff that I'm sure I can see Jay's mind is just spinning of using SEO tools to do due diligence on investments. I'm the obvious examples I'm sort of thinking of is if we're looking at a company that's maybe selling to consumers, how present is that company on the internet? I could think of one famous company that has a multi-billion-dollar valuation here in Canada. I'm not going to say who, but some short sellers did a report on, and they effectively showed that this company is basically a nothing burger, despite all of these, positive, bullish pieces on promotional websites. What could you share any sort of ideas or things you would look for if you were diligencing a company using an SEO tool?
Well, yeah, I think first of all, Semrush is more than just SEO tool. So you can actually do quite a sophisticated research about the whole online visibility profile, not just search engine optimization, but also direct traffic, referral traffic. So we cover all the bases and all key marketing channels. So in general, the way I was using the product is, let's say you have a conversation with the CEO of the company. One of the standard questions would be, who are you competing with? And most of CEOs will tell you, oh, no, we are building something extremely unique, especially if it's a seed stage company. They will say, we are building something truly unique. Nobody have done this. We are really on the league of our own. And then you check them in Semrush and you see, well, first of all, there are other companies that offering similar services. And on top of this, they're actually even competing for the same audience. They're bidding for the same keywords. So it's actually much more competitive space than this people want us to think. So that was my kind of main use case. But also understanding industry trends. Like, for example, if you see that there is a company that experiences huge growth in organic traffic, or their brand keyword experiences huge growth in search volume, that's a good indicator that you found some industry that is doing really well, especially if it happens to couple companies. Like, for example, with ride sharing space, if you look at Uber and Lyft, at some point both companies were growing very well in terms of traffic. They were growing even better in terms of app downloads, but even in terms of traffic, in terms of advertising budget, it was clear that those companies are experiencing some very, very good growth. So that's the second use case for the project, identifying breakout product categories.
I see. I never even thought that we'd touch on that
can't believe
subject.
we haven't thought of that,
And this
Steve.
is just this is such a brilliant investor edge. And just like what you just said about how sometimes you talk to CEOs of public, we're mostly in the public arena. We sometimes look at private deals, and that happens to us all the time. The CEOs downplay their competitors as like, oh, they're not a threat. Here's why. Oh, never even heard of them. And then it's like a quick SEO search, and it's like, how have you not heard of these guys? They dominate the search ranks. Are you not Googling your own company and look
or your own industry? Absolutely. That's. I'm embarrassed. I've never thought of that.
Yeah. Okay. So let's maybe talk a little bit about the data that Semrush has collected. How does the company go about collecting all the data, and how valuable is this data?
So I think, the value definitely different for companies of different sizes, right? Because what you can do with data is sometimes the function of how much money you have, how big is your marketing team, and so on. But in general, what we do with data is we give people 360-degree view about their own online visibility of their competitors, and market trends in general. And that's kind of like, without Semrush, you can think about people being kind of blindfolded and having a boxing match with their competitors. And what we do is we remove this blindfold, so they see everything that is going on in their space, and that makes them much more competitive. And if you think about this, marketing to some degree, especially search engine marketing, is a zero-sum game. You have limited supply and you have ever increasing demand for customer attention. And the only way to get more visibility is by reducing visibility of someone else in your space. So that's why our data and our tools are so valuable. We just give people kind of understanding of what other people and they are doing in this market. And in terms of how we get the data, we collect data from many different sources. So, for example, one of the sources, we crawl the web. We use kind of same kind of crawling technology as Google uses to build their search index, but we build our own index. And what it means, we go to every single website we know about, we follow all the links, and we build our own map of the internet to understand how the websites are connected with each other. We also buy a lot of data from other people. So that would be panel data that we use to estimate metrics such as direct traffic or referral traffic. And on top of this, we use a lot of kind of first-party data to calibrate the system and make sure that our metrics are accurate. So that's, in a nutshell, allows us to build this engine where we know what's going on and we can use this information to highlight opportunities for our customers.
Okay. From looking at your S1, I noticed you guys are only charging enterprise clients like, I forget the number off the top of my head, but it was around like $4,000 per average enterprise user. Seems like there's an opportunity there. Like, just knowing, I've known some people that have worked for companies that sort of had these social media analytics platforms, and they were able to get quite a bit of money out of these on a per enterprise basis. Is there an opportunity there for Semrush, or where does Semrush see more growth on a sort of strategic level?
Yeah, I think it's a great question, and we hear it a lot. I would say historically, we always have been focused more on SMB side, just because we believe that's more interesting, more exciting space. But at the same time, product is just so good that big companies buy it as well. And I think many product-led growth companies discover the same traction. So for example, we are used by more than 30% of Fortune 500 companies. So I think that tells the story of how good the product actually is. But like many product-led growth companies, we grow from the bottom within organizations. So first, maybe someone in the marketing team uses the product, then maybe they start sharing their account with colleagues from other departments, from social media department, from PR department, and we slowly spread across the organization. And then at some point, we can get to much bigger deals than what you've mentioned. But it's a truly organic growth process where we grow from within organization. And I think this is very consistent with what we hear from many other product-led growth companies and how they approach the same situation at a similar stage of development.
What's the culture like? Like, are you guys New York based, Silicon Valley based? Is it like one of those? I'm picturing a lot of startups where you go in and everybody's working on like picnic tables next to each other. What's the Semrush culture like?
So right now our headquarters is in Boston, but we like to think about us as a truly global company. Have many offices in the United States. We have offices in Europe. We have people from many different ethnic groups and nationalities and countries of origin, speaking different languages. Our product is sold in more than 100 countries globally. So we think about us as a truly global company, but what it means is that you have also a lot of people who work remotely. So from culture point of view, it's very important to get people together to make sure they share the same values and at the same time bring their unique experiences and backgrounds to the table. So I think with COVID, it's starting to be a little bit more challenging to do this, but usually in terms of culture, our goal is just to get people together and make sure they socialize and bring their diverse perspectives to the table.
What drove you guys to go public?
Sorry, can you repeat? You said what drove?
Why did you guys choose to go public?
Okay, yeah. So I think for us, there have been a conversation like what the future of our company should be, what we need to do to continue growing as a company. And I think roughly 2.5 years ago, we had one of those conversations, and we decided that the next logical step for us would be an IPO. And the way we have been thinking about this 2.5 years ago is that there are levels to the game, right? So you can play in college league, or you can play in NFL, or for example, you can win regional tournaments, or you can go and play in Olympics. And we felt that from business point of view, being public company is gonna go into Olympics, and we felt that it would be definitely challenging, but it would bring opportunities. And through overcoming those challenges, we would be able to grow as an organization and become bigger and better. And that's why we decided to pursue this opportunity. But it was decided a long time before we actually went public. It's a usually very long process, and it takes a lot of preparation, especially designing the processes, finance process specifically, and also bringing more senior executives with public company experience to the team. So that was our focus before we actually could go public.
So your role is chief strategy officer, right?
Yeah.
Let's just say theoretically, I write you a check for $1 billion, and you could spend that doing anything in the SEO space. What what I'm, but I think what I'm struggling with is what it seems like you guys kind of have this nice little engine that's already kind of running. What are the costs, and why would you guys need to really raise capital?
Yeah, it's definitely not the situation where we needed to do that. It was just part of the process. We didn't want to do anything unusual, right? We wanted to take standard route. So I think there have been other ways to do this. Like right now, some companies do direct listings, and some companies do SPACs. We didn't want to do anything except the standard route. And standard route means you will be raising some money. Underwriters expected at least certain percentage. But in general, we kind of felt it would be good to have extra sort of firepower on the balance sheet if we want to do something opportunistically. We have done M&As previously, so small deal really, but we wanted to have an opportunity to do this kind of deals more frequently if we see good opportunities. So that's more about just getting a little bit more firepower and following the process that we wanted to follow from the very beginning. I think answering your questions, it's always better to have an option than find a good opportunity and then say, well, I cannot afford it.
Mm-hmm. Okay. Jay, do you have another question?
Actually, I do. So I'm going to change the direction of discussion a bit here. You had mentioned that you had your own startups previously and you were in venture capital. So what specifically were you doing? What startups were you behind, and what led you to get into venture capital?
I actually started like real career, I would say, with role in venture capital firm, and then instead of continuing in the VC space, I went for a couple of years to start companies, and we worked in gaming space. So it was game development studio and publishing company. I think I started playing computer games from very early age, and from that point, my dream was to work in a gaming at some point, and I just reached the point where I could actually do that, and I tried, and I think the problem is sometimes you shouldn't meet your heroes, right? So when you're actually in the gaming space, you realize it's not as fun as you thought it would be. It's like every other business, actually. I would say in terms of overall space, it has really weird risk reward profile. Like you make money only if you're at the very, very, very top, or if you found some really interesting niche. So yeah, we were making, I think, good money, but it was more in a category where I would call it lifestyle business. So we didn't have like home run games like Fortnite. So we were making money, but as I said, more of a lifestyle business category rather than something super big. And as I said, at some point, I realized it's not what I thought it would be. and people I worked with, they felt the same. So we changed the direction, and we spinned off a couple SaaS products from that business, and they ended up doing really well. But I was less involved in them. Right after I left that company, I joined growth stage VC firm. So I got back to VC world.
Okay. Well, Eugene, we really appreciate you hopping on here. The Semrush is a name that we've taken sort of an interest in. We don't own any shares or anything, but I think that this data you guys have collected sounds like it could provide a wealth of opportunity, and the growth of the company's just been really intriguing, and it has caught our attention. And we wish you guys continued success, and hopefully as you continue to have success, you'll keep coming back on and telling us about how the company's executing.
Absolutely. I'd love to do that.
Awesome.
Thank you so much for inviting me.
Thanks, Eugene.
Thanks, Eugene.
Oh, that was fun. You know, the thing that they sort of caught my eye there at the end, and I started thinking about, is all this data that they've collected in some of the different types of ways they can monetize that beyond what they're doing is kind of interesting.
Yeah. See, I think the key takeaway for me was that for some reason I've not thought to use SEO tools for investing purposes. I think that's a genius idea.
So it sounds like you're going to be going to the deep dive
I feel like I have to throw out everything I've
asking for
learned
the
and start
budget.
over.
You're going to ask
Yeah.
for the budget. Well, that's interesting, because we talk to so many CEOs, and like they when they talk about their competitors, they often like just sort of glaze over top of it, and that is a really interesting tool. And we see it in short reports sometimes. I mean, Nate over at Hindenburg, I think Siggy at Grizzly, they'll mention just how much traction a company actually has online, which is pretty interesting when you're talking about some of these companies that in the public markets, where there are bad actors and there are shady tactics to try to present investment opportunities, is a lot more interesting than they are. It sounds like an interesting investor tool, which I didn't even think about that.
Yeah, absolutely. I'm going to be opening the company purse strings later today, most likely. Just a heads up.
So let's get into some Canadian small cap news. What's going on in the Canadian small cap world today that caught your eye?
So there's a couple things. I think probably the biggest would just be Well Health Technologies today announced they're starting a normal course issuer bid. Their equity's down about $2 from their last raise, so I think they're trying to probably keep some investors happy that bought in at higher prices, and drive some positive momentum in the company again.
Mm-hmm.
I think they subscribe for, or they indicate it'll be for like 2.5% of the current shares outstanding. So it's not the largest buyback program we've seen, but it's definitely notable. Outside of that, there's a bit of stuff here and there. Shopify reported. I'm sure you'd like to get into that one.
I haven't even looked at this. Let me pull this up here. Our man Young Justin covered this, I take it?
No, not Young Justin. One of our new writers, Mr. Velasco.
Velasco covered it. Well, let's see what Velasco had to say here about Shopify. This is a name that I'd like us to cover more on the platform, because we're trying to build a reputation and a name here covering Canadian equities. And when we look at it, so many of these names are commodity driven or banks, and we don't get many successful tech deals out of Canada. So Shopify, we need to celebrate these guys.
Well, we had Nortel, didn't we?
Oh God, thanks. It's kind of weird about the Canadian media is when the Canadian media falls in love with a stock, they never shut up about it. There's remember Sino-Forest, which was like one of the most strange deals that every Canadian broker was talking about. Sino-Forest, like here we're in Canada where we have access to tons of lumber, and this was a Chinese lumber deal that was for some reason listed in Canada. And like the media loved it. The media couldn't shut up about Sino-Forest. It was like a Nortel.
Yeah, to me it was always like Nortel and BlackBerry. Now
yeah.
Canadian, I get it, but still,
so
it's not a good track record.
let's get into what our pal here said about Shopify. They reported their financial results for Q1 2021, indicating they generated $988 million in revenue. So they're on about a $4 billion revenue run rate, which is
Wild,
about
isn't it?
$500 million in the same period last year. Revenues for the quarter consisted of $320 million in subscription solution revenue, as well as $668 in merchant solution revenue. I'm not sure what that is. In total revenue of $988 million. I have a friend who, and I think I know what the merchant related revenue is probably something to do with how you can effectively sell products through Shopify that they offer on their catalog, which I think is a partner through Alibaba, but I shouldn't be over speaking here because I haven't spent a lot of time on Shopify. So I
haven't either. For the amount of space it demands in the Canadian market, I have not spent an appropriate amount of time on it.
The company's net income for Q1 2020 came in at how did it come in at 1.3 billion if they only did 300 billion? They did less than $1 billion in revenue. They did 1.3 billion in net income.
Give me a second, I'll pull it up, and if I got to issue a
Well,
correction,
let me pull this up here.
I've got it here. It's all good, buddy.
Oh, let me pull up the filings here, and then let's play. By the way, I don't know what the valuations currently. Don't tell me. I want to play that game.
Oh, you want to play the valuation game?
The valuation game of where I would value it. I don't know where the share price is. So this is Shopify here. Let's see here. Net income was $1.3 billion. So they had an unrealized gain on an equity investment. That would explain that. In general, on an operating income basis, they did about 100 million. Okay. I'm sure that was covered in the article. Let's see here. I love my cash flow statement. They generated $100 million in cash flow. Impressive growth profile. So they're doing about $500 million in operating cash flow alone. I'm going to say that they're trading at, because it's a hot name, I'm going to suggest that they're trading at, so that would be, I'm going to give them 40 times $500 million. I'm going to say $20 billion valuation is where they're trading. What's the number?
I'm going to a different source to confirm because the valuation is something else. Okay.
Wait a second. According to Y charts, it's 200 billion. Huh. I'm off by a multiple of 10.
Yeah, that's why I was checking, because I'm like, you know what? Like, I don't disagree with you on that metric, right? CEO.ca is giving me 193 billion, and TradingView is giving me 177. So it's somewhere in there. None of these platforms ever seem to have the correct market cap, and it drives me mental. But
look, they're trading at $1,600 a share. And based on, we'll pull up the share count for those of you who are new to this. You can go to the balance sheet. It often says it. Or you can go down to the income statement here. 126 million shares.
Next one will say
126 million shares.
That's shares used to compute net income per share, which will be if they issued shares during the quarter. No, it's up. Scroll up right there.
Here. 117.
So if they issue shares during the quarter, they typically average out the shares over the quarter. Yeah. So it's easier just to go to shareholder equity.
On a big cap, I'm going to assume that they didn't raise that much money, but it's good to note that I didn't want to go too deep into actually getting the full share count, but it's good on air kind of exercise to go through. Okay, so 117 million shares trading at $1,700. So
no, 122 million.
122 million.
Yeah, you're looking at March 31st, 2020.
Oh, okay, good.
Actually, it's 124.
124. So at $1,000 a share, that would bring us to $124 billion valuation, and they're more than that. So yeah, they're trading around $200 billion. Wow. Whoa, mama!
That's a high valuation.
And people were calling Coinbase a pump and dump. They do 6 times the operating cash flow and trade at less than about a third the market cap.
This thing is topped out at, I think, like $1,900 a share.
Okay,
$1,958. So I mean, this is one of those names where fundamentals start to matter a bit less, I would say. And the whole reason I say that is solely because
remember when Andrew Left put out his short report on this company back in like 2017, and it was like $60 a share.
Can you imagine if you held that? Holy man!
This is we have 1,000 people watching us online right now.
Yeah, I was looking at that too. Let's pull up Semrush and see where it's trading at.
Did Semrush just boost us?
That's not Semrush. SEMR. There you go.
I said, did Semrush just boost our views? It says we got 985 people watching us right now. So we actually were put out a positive report on this name out of the gate. For those of you who watch old Small Cap and Jay at the deep dive, we like this name out of the gate. I think that they've harvested tremendous data. I think that they actually can probably get a bunch of bang for their buck out of their customers. There's probably a lot of room to grow. And Meredith, who's long stock barrel on Twitter, gave me this idea. She was tweeting about it yesterday. The idea that when you're investing in companies where the customers feel like they'd be willing to pay more for the product than what they pay, is typically companies where good things are going to happen. And I think that it's in this case here, just hearing like I know people that have worked for companies that sold, social media analytics and those types of platforms. And they were charging like 50 to 100 grand a year for these platforms. And a lot of times enterprises, they don't even care. They're so big. It's like, it's just part of the budget. We just send out the check.
It's the cost of doing business, really.
And he's like, a lot of these like customers, like they don't even use the product. Like this one particular friend would have admitted that the product was crap. And but like those enterprise clients were so valuable because once you get the deal, they just generally like certain clients, they just don't care. And here they're charging $4,000 an enterprise client. Those enterprises.
You could charge double, and I would say probably 85 to 90% wouldn't even blink at it.
We're talking about like mining and scraping the internet for data, which has to be. There's a little company that does that quite well. Now they present it as a consumer platform called Google. But there's Facebook too, right? Like, and the thing is, I go to a lot of microcap conferences. I haven't been doing that since COVID started. But I always hear these CEOs and they always say, oh, the real play here is big data. It's big data. And, then when I asked them, what do you mean by that? How are you going to monetize this data? They never really can seem to answer it. And it's like, well, the data they're collecting is kind of niche-y. Like, I don't know, maybe there's value in it, maybe there isn't. But like, I'm of the mindset that if you've got proprietary SEO tools that nobody else has, there has to be tremendous value in that. And I mean, look, they've gone public at what, $1.5 billion valuation here, according to TradingView.
Yeah, that actually seems quite low to me for most well-regarded IPOs, right?
Yeah. What else is going on in the news today that caught your eye?
There wasn't a whole lot. I mean, Valens is looking to go onto the NASDAQ. As a result, they're looking at a share consolidation. They didn't provide specifics, so that's about all the time you want to spend on that.
Red, white, and blue.
Red, white, and blue.
Okay. Do you mind if we talk about this one for a minute? Because this is a name that I'm actually starting to find interesting. I messaged one of the guys at the company today saying, congratulating them. I know that everybody likes to shit on this company because it was kind of a sloppy go public. They used to be called Title. They had this weird sort of structure where they were going to invest in cannabis operators so long as they got a 10% royalty on revenue into perpetuity or something like that. It was a structure
which I think is a great idea personally.
Yeah,
if you can get that,
it's a great idea until you actually think through the mechanics of how is this going to work. The world doesn't work like that. And this is when you get too greedy on a deal, you can sometimes disincentivize the other people on the deal, and then it's like, why do they give a shit, right? And,
yeah, absolutely.
And like if you're too onerous, they're going to find a way to wiggle their way out of that. They're going to find a way to wiggle their way out of that because nobody's going to want to spend that much time I know you hate the name Hadley Ford, but I remember at the time, Ianthus was public, and I brought it up to him, that title structure, and his point to me was, well, yikes, 10% into perpetuity, that's probably 50% of your bottom line. Because if you're doing a 20% net income margin, there goes.
So I mean,
50% of your bottom line.
Streaming, I think of all of the mining streaming royalty firms out there, right? You only want to take a 2.5%, 3% royalty effectively, and I mean,
but that wasn't the Mala title.
Oh yeah, no, I know. I mean, Cannabis Wheaton, which was the predecessor of Oxley in Canada, tried to do the same thing. And I mean, both instances didn't work for a reason. They were too onerous, right? It's just like you said. But yeah, Red, White, and Bloom, today they closed the acquisition of Acreage Holdings Florida assets. They structured it a bit weird, though. So when I say that, I mean on Red, White, and Bloom's part, total acquisition price of $60 million. In that, a portion was paid up front. I think it was something like $5 million plus 16.5 was paid upon closing in cash. $7 million worth of shares, and then 3 different promissory notes. One for $3.5 million, which is due in 5 days, and then one for 7 months, and one I think it's $18 million for 13 months at 8% interest. Now, when I say things are kind of weird, what I'm referring to is actually how Red, White, and Blue managed to pay for it. So they actually sold off a portion of the Florida assets. I think it's at least 3.75% of the Florida assets were sold to a group of 4 different private investors. And that was sold off for something like $3.5 million. Plus, then there's also a $5 million debenture associated. But that 3.5% that's sold off, I'm going off memory here, so if numbers are a little rough, that's why. It can be purchased back for 8 times the EBITDA that Florida assets generate.
So I'm a little confused by what you said there. Did you say that there's an option for somebody to buy it back?
There's an option for Red, White, and Bloom to buy back a portion of the Florida assets. To fund a transaction, they sold off a portion of the asset privately for a few $million.
I don't actually like that deal structure for Red, White, and Bloom, because
if you scroll down, you've got the bar right over it there. The company also sold off a portion of the Florida assets to certain investors to fund the transaction, with a total of $8 million raised via this method. $3 million comes from the sale of equity in the asset, amounting to 3.75% of the Florida operations, with the company eligible to repurchase the stake at a price of 8 times EBITDA of the Florida asset. So that could be a very expensive repurchase price.
Yeah, but so here's the thing. Is if there's one thing we've learned about the sector, it's that valuations always front run execution operations, right? So chances are that if things are going well in Florida, you're going to be able to raise the capital before your EBITDA actually skyrockets, right? So are you able to go and raise, $300 million before your EBITDA actually gets up there? Probably. Especially if it's at your discretion.
Yeah, that's a fair point.
You can easily get ahead of that. I'd love to see the fine print of that contract though, because I don't think that the counterparty would be stupid enough to sign that. Well, yeah, it's cannabis. It's cannabis.
But I mean, it's like I said, if I could get a 3.75% stake in something like this and effectively just get a royalty for sitting on my ass, I think that'd be great for me.
Yeah. All right. Anything else you want to get into today?
STEM Holdings is entering the Michigan cannabis market. Something quick there. They're partnering up with Organic Guys, who is a premium craft cannabis producer in Michigan. And that's basically STEM's segue to get their delivery platform throughout Michigan. So
STEM and red, white, and bloom actually seem like a really interesting pair to marry. I think
I don't disagree.
STEM, and I know that they're doing deals together, but
yeah. So the background there, guys, is Premium Vapes, which is a brand owned by Red, White, and Bloom, is being distributed by STEM in California. And I mean, I'm speculating entirely here, but Red, White, and Bloom getting into Florida might be the perfect way for STEM to get into the state where they're headquartered. So.
Yeah, well, it's also they've got a big presence in California. They have this tremendous value add, which is their delivery system. The challenge with the delivery system is that you need licenses. Red, White, and Bloom now looks like they're doing quite well on the license front. I think that the challenge I have with Red, White, and Bloom is I don't know where that revenue is going to come in when we actually see it fully consolidated with Michigan. Because look, they're talking big numbers. If the numbers that they're talking are actually true, Red, White, and Bloom is a pound the table screaming buy. I just don't trust anybody because I've just been lied to so many times that it's really
it's taken so long for them to get that license that investors have definitely grown weary of it. And I mean, I understand that that's fair. But once they do get that license, if the regulator allows, I don't disagree with you.
Okay, we got our main man, the JTD posse, is coming up saying any movers in the portfolio today. One name that's doing quite well that we should make a brief mention of is Emerita.
A late stage junior exploration company focused on Spain, where they've got, I'll call it 1.5 assets because one has not technically been awarded to them, but it's
going to
a shoe-in effectively. We're just waiting on the courts for that. They have done great today.
Yeah,
high of what, 42 cents?
High of 42 cents. We actually bought some this morning at 37, I think.
I think you're correct on that. So,
full disclosure, they're also a client, but we actually went in and bought some open market. I actually like this stock quite a bit. As somebody who doesn't really understand mining that well, I do like this name. If we're seeing buying start to sink in, because it is a tremendous asset. They've been awarded a tremendously valuable contract, and if the market's going to decide that they're going to champion this thing, who knows what price it could ultimately sit at.
Absolutely. I'm not going to disagree with you.
That's a big challenge with mining, though, is you don't want to be caught, being the uptick and then all the hype dies down and it just goes back to being a mining shell, which is what happens so many times. So when I start to see real volume kick in, and this already has tremendous fame on social media, I think it's I think EMO is a very, very interesting name. We're actually gonna have David Gower on, I think, next Friday, so we'll be able to get into it with him. Which I'm hoping, which I'm hoping is going to be a relatively big story. All right, let's wrap it up here. Is there any anything you want to talk about that you're going to mention on? Sorry, I'm having a hard time with words all of a sudden. Is there any articles or content coming out of the deep dive later today?
Yes, of course I do. So just looking at it now, because you stumbled over your words, I had the time to pull it up. So thank you for that. At 1:30 here Eastern time, we have a article on Canada Silver Cobalt going out from Jim McFadden. Talks about some recent results where they had very, very high grade results over very short intervals. On top of that, we've seen some drama between Tesla and China, which Hermina covered. And Justin is continuing on with his mission of covering all the major consensus estimates for earnings this week. So lots of content today. Probably one of our busiest days content-wise that we've had. So lots going out the door.
Well, that's good to hear. I don't got any parting shots for you guys today, but I am going to say this. Nothing we talk about on the show is designed to be financial advice. If you're looking for that sort of thing, go find somebody who's licensed. We are not licensed to give financial advice. Nothing's a buy recommendation. Nothing's a sell recommendation. Nothing is a neutral recommendation. There are no recommendations other than the Impossible Whopper at Burger King. It's a vegan Whopper, and it's delicious. And I rate the regular Whoppers too. Look, guys, you could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us. I sincerely appreciate that, and I hope you'll join us tomorrow. I don't know who the guest is. I think we have a guest tomorrow. If not, it will just be me and Jay talking Canadian small caps. All right. Thanks, everybody. And go Jays. Vladdy, 3 dingers last night, baby.